I'm a mathematician. I don't really believe in the psychology of trading. I think you need to set down your rules, test your rules, prove that they work, and follow your rules. That's my psychology. And if you haven't tested your rules, it's because you don't want to know the answer.
Well, I think if you have that emotional response where you're nervous, your adrenaline is going, your heart is racing, that's not a way to make good decisions. So if you're chasing things, if you're chasing stocks, if you're not following your rules, and it's very hard to catch yourself. I mean, in the heat of the moment, especially if you've just had a loss, you're trying to, people typically want to make back the money that they just lost. And so they almost revenge trade. They're trying to make back that loss and they don't follow their plan anymore. I tell all my students, you should always have a one-page written plan on your desk beside your computer with even a little checklist. Not because you don't know the rules, but because in the heat of the moment, it's very easy to stray from your plan. And having that piece of paper there is something to go back to and say, am I doing this right? And it might take you an extra few seconds, but your decisions will be better. And again, trying to stay calm. And if you feel like you're anxious, in poker, they call it, I think, going full tilt, where you get off the rails emotionally, step back from your screen. I have a gym in my office, and if I feel like I need to let off some steam, I'm looking at it right now, it's over there. I just go do some chin-ups or something to get the mind in the right place again.
My discipline comes from wanting to do this and not forcing me to do things that I really don't want to do. It's still hard to do an ice bath, I can tell you that. So it's still hard running up the stairs, but that is more fun for me. And I want to come from a place of inspiration and motivation when taking my losses, when training and practicing to be disciplined in my trading. Why do I want to be disciplined? Because 90% of traders, they don't do that work that I do in terms of, practicing to be disciplined so that they can be disciplined in their trading. And I look at myself, and it's very self-indulgent, but who cares? It works for me like a hero, right? So I'm the 1% who does what is painful because I take my loss, or I manage myself around risk management, and I take pride in that. So it becomes my inspiration, my motivation for wanting to be disciplined. And that takes us to the conversation around self-image. And so who do I want to be? What lifestyle do I want to live? I want to live the lifestyle of a disciplined person. Why? Because I love it. Now, you will notice I don't show discipline in eating chocolates because I love chocolates. I'm not going to take that away from myself. But I balance it out with other disciplines. Like I don't eat cakes. I don't like cakes. They don't rock my boat. I don't eat a whole block of chocolate, but a piece, like one little row of chocolates. So that is what I would ask then my trader. Where in your life are you disciplined that you then can translate into your trading? Or are you ill-disciplined everywhere in your life and then you're doomed in your trading?
One of the important things about trading, and I think it's in relation to a question you thought might ask me a bit later, is that uncommon results do not come from common thinking. There's a lot of mythology in the market, things that we take for granted as being correct, and they're not correct. Closer examination shows that they're a load of rubbish. But most traders, most investors, accept those as a given, as a bedrock of their understanding of the market, and go on to make consistent errors and consistent losses. And we know that the vast majority of traders who start at the beginning of 2023 will be washed out of the market before the end of 2023. Why? I would suggest partly because they don't analyse what they're doing enough. They take the common stuff.
You have to learn to take the losses. I mean, the losses aren't fun, but you have to learn to take them in order to survive in this business. And I've had 2 losing years. I mean, where the whole year I didn't make any money. So you have to be able to survive that. I mean, out of 42, that's not bad, but still it's hard on the ego when you have a losing year. One of them was 2001, the dot-com crash. I lost 11% that year. The NASDAQ lost, I think, 68% that year, and I lost 11%, and I was upset about it. It happens.
So when I came to trading, if I'd have brought that discipline with me in the early days, I would have been successful a lot sooner. But because I suddenly was in an environment where I had money, hey, I'm a smart guy. This doesn't look that complicated. I can have a go at this, and I didn't bother with any rules. And I spent the next 2 years gambling. And it wasn't trading, in retrospect, it was gambling. And it's ironic because I never bet on anything. I've zero interest in gambling. And yet I developed all the bad habits of a bad gambler. I was over trading, revenge trading, over leveraging. I was on a high when I was winning. I was on a low when I was losing. All the usual things that people go through.
In a bull market, everything goes up and people think that they're up there with God. Once the market changes its characteristics, they find that they can't survive because they've learnt bad habits. So as we say, we run with the bulls and we hunt with the bears. You have to know when the market's changed and adjust your tactics and the way that you use your toolbox differently according to the situation. Now, it doesn't mean it has to be an instant change, but there has to be a change that takes place. And then on top of that, of course, over the last 10 or 15 or 20 or 30 years, the nature and structure of the market have changed. So although they're still basically buying and selling, which is what we're all on about, the way in which that's executed, the impacts of other forces on the market are substantially different now, for instance, to what they were 10 years ago or what they were at the turn of the century. Think of it this way. The principles of flight haven't changed, but you would not use a 1942 manual for flying a Spitfire to trade today's markets flying an F-24 or an F-25. The principles remain the same, but the mechanics that we are dealing with are very, very different.
Human behavior is still the same. People are greedy, people are fearful, and that never changes. The market moves way faster now. The access to information is way better. When I started trading, I would hang out at the stock exchange because that's a place where I could get real-time quotes. And I would write down all of the stocks that were behaving abnormally that day. And then I would rush home, download data so I could look at the charts, because back then we didn't have the internet to pull up charts. So that whole process would take me 2 hours. Well, now I can do that in 30 seconds. So that's the biggest thing, is technology has made it way easier. In order to have an edge, I have to always be ahead of the crowd. So I've had to modify what I do, shorten the time frame, build new tools to always keep my edge. But the basic concept is still the same, and it's ultimately leveraging human fear and human greed.
So over time, you work out which areas you're most suitable for. And that's an important approach to trading. We have sometimes this idea that if I know how to trade, then I can trade anything, anywhere, at any time. That's not correct. The reality is that most of us are good at one or two things. So the challenge becomes to A, as quickly as possible, identify what you're good at. Then to seek out only those opportunities that are compatible with what you're good at. Now, I can look at charts retrospectively and say, oh, I should have been there. I could have bought that one. I could have ended that. Certainly true. But they're not situations that I feel comfortable with. So the odds are that I'd muck those trades up. So what I'm looking at is developments that are compatible with the way that I know I consistently trade successfully. Where do they happen? Anywhere. So I'm not stuck to a sector. I'm not stuck to a commodity. I'm not stuck to an instrument. What I'm looking for is the nature of the opportunity that's there, because I know that that's something I can trade consistently well.